Live.
Hi, hello and welcome to the 128th online show of the Business and Banking Dialogue, a one-stop shop for your bi-weekly dose of information, analysis, and debate of the best of topics from the world of finance. We come to you live every Wednesday and Friday. I'm KK, your moderator, and we are live today across YouTube, Facebook, LinkedIn, and Twitter. So the topic of today is about financial crimes. Financial crime has been a pivotal issue in the global arena for several decades now. Authorities are constantly looking for new ways to track down and prevent financial crimes. So financial crimes can occur in many different forms, and they happen almost all over the world. Some of the most common crimes that you and me know about facing the financial sector are money laundering, terrorist financing, fraud, tax evasion, embezzlement, forgery, counterfeiting, identity theft. So these are some of the kind of thefts and words you have used, you have seen, you know about it. These crimes are committed every single day, and the government across the globe are constantly prosecuting financial criminals while searching for the truth and to prevent the future crimes of these sort. To discuss on the menace of financial crimes, we have with us today Mr. K V Karthik, who has appeared earlier in our show before. Thank you, Karthik, and welcome to the show.
Thank you, KK. Thank you for the opportunity.
Yeah. So let me give you a brief about Karthik. You will see a slide on the screen. Karthik leads the financial services sector within Deloitte's forensic practice in India. He is also the India financial crime leader. Since he's the leader in the APAC financial crime network for Deloitte's investigations. Karthik has extensive experience in financial crime management, having spent more than 19 years advising large corporates in financial services across private and public sectors. That includes banks, brokerages, private equity firms, as well as insurance companies. Karthik has led large-scale remediation and investigation projects, including regulatory-driven investigations for both domestic and international. He has done extensive work in the areas of anti-money laundering, anti-fraud advisory, counter-terrorist financing, economic and trade sanctions, anti-bribery, corruption, and devising new target operating models for financial institutions to respond to regulatory shifts and demands. So I think he's the right person to talk about the financial crimes that the financial institutions across the globe face. So let's hear from him on this topic. So Karthik, what is financial crime? Can you give us give an audience about a glimpse or a 60-feet view on what is financial crime?
Sure, KK. So when we hear the word financial questions, the first thing that comes to mind is what is financial crime. So financial crime generally refers to any kind of crime or misconduct, which would include something related to fraud or dishonesty, bribery and corruption, cybercrime, money laundering, economic and trade sanctions, tax evasions, or other conduct issues like insider trading, market rigging, or something related to unpublished price sensitive information, those kind of issues.
Yeah.
And as you know, this is a term which is a encompassing term, which includes not just related to money laundering but also fraud and misconduct and other market related issues. So criminals and law enforcement agencies, as you know, as you mentioned, are engaged in an unending race for new ways uh, to thwart the crime related to financial crime. And these schemes in particular are constantly evolving and adapting. And there's a relation between many of these schemes. Uh, Threats, which we call as financial crime threats, can be categorized primarily into six main pillars, if I can say. And these are: one is fraud. Uh, what are the typical issues in that? One is professional. I mean, these are the current market scenarios. So the typical issues are like the professional fraudsters and criminal gangs are continuously evolving and devising new ways to obtain funds and evade detection. The second is money laundering and tax crime, like you mentioned. The biggest issue is in terms of how to identify: is it a tax crime, is it a tax evasion, or is it a tax planning, and how are money launderers trying to evade the system and the framework put in place by the regulators and the financial institution. That is the biggest challenge. The third is obviously sanctions related, because the biggest issue is when you do a trade with entities or individuals who could be subject of sanctions. That's another issue, that how do you manage those sanctions. And there have been a lot of talks in terms of how do you look at sanctions, the lists that have been used for monitoring those sanctions. That's the third issue.
So when you talk of sanctions, these are the country sanctions that are imposed by the world authorities. Is that what it is?
It could be individuals, it could be entities as well. So when you talk about sanctions, there are multiple sanctions. One is individuals, one are not necessarily countries, but there are countries as well as organizations within those countries who might be subject to sanctions.
Okay.
Then the fourth is obviously bribery and corruption. Then cybercrime, and how are the attackers utilizing these sophisticated techniques to target vulnerabilities in your system and processes. And obviously, the other issue which I said is can be clubbed under the broad umbrella of operational risk. And the biggest issue is that regulators are increasingly clamping down on these incidents of alleged market conduct, insider trading, market abuse, and others. So, if I look at it, these are the main six pillars of financial crime.
Okay. That's, I mean, there's quite a lot of things happening in the financial crime world, isn't it? I mean, there are six pillars, but yeah, within these pillars, I'm sure there are many more, many more topics and subdivisions. So it's a whole lot of things on the plate for financial institutions.
Absolutely.
So, Karthik, what are the key challenges in financial crime compliance?
Okay. Before I get into that, KK, if I can just take a step back and say why is FCC such a big issue now? Earlier, we used to look at it. We used to talk in different themes. We used to say fraud, then we used to say AML. We used to look at bribery, corruption, and these used to be considered under separate buckets.
Right.
And banks and financial institutions now obviously can no longer afford to ignore these together, or these are called as FCC compliance, and there are probably three main reasons for that. One is a strong regulatory action for that. So one is since it's an ever-present threat for organization, and it can also have an effect on the institution and the institutional mechanism as a whole. There have been very strict enforcement actions across the globe. So, for example, in since 2009,
Yeah.
regulators have across the globe levied approximately $32 billion in
Wow.
just AML related fines. So, and let me just give some examples. So, for example, very just a couple of years back, one of the largest banks in the UK was fined about 109 million pounds, and
Mhm.
FCA found significant shortcomings in the bank's assessment and adequacy of its control mechanisms towards identifying and mitigating the risk related to money laundering, and in some specific areas. In India, you know that there have been investigations related to the unpublished price sensitive information that happened about a year or two back. You have also seen a number of cases where, for example, RBI has penalized several banks on fraud reporting. In fact, the RBI also observed that despite having advised banks to report fraud and accountability in the back of, like, say, a CBI having initiated criminal proceedings, the lenders had delayed or did not report fraud. And they have also spoken a lot about the issue of frauds and early warning signal. The reason behind this is that the value that what a criminal actually takes is only part of the cost. And
Mhm.
that for an institution, there are penalties, civil judgment, cost of litigation, and conducting investigations and remedial actions. The second biggest issue, if you look at financial crime, like you mentioned just a few minutes back, is that it's becoming complex. Criminals are using more sophisticated means to remain undetected, including, say, sometimes a globally coordinated technology action, insider information, e-commerce schemes, and others. Bribery, fraud, and cyber crimes keep getting more and more sophisticated, and actually are converging into a perfect storm. In fact, if you ask me, is there a link between AML and fraud? Yes, there is a link. Talk about it during the
Yeah.
discussion we're having. So what is happening is these financial institutions are grappling with criminals who often target a number of different internal and external channels
Mhm.
in an organization. In addition, they must also monitor trade, sanctions, watch lists, and deal with the proliferation number of small financial crimes as well. So this is the second biggest challenge. And third, needless to mention, is the reputational risk.
Yeah.
And at it, more and more the regulators have started asking if the board is involved in managing financial crime or not. So that is
Right.
there is a huge focus on financial crime, and,
Mhm.
and how are organizations dealing with it. It's a bit fragmented, if I can say. So,
Okay.
so current approaches, as I mentioned, everybody is looking at it in silos.
Yeah.
You having a different framework system for fraud, for AML, anti-bribery, corruption, sanctions, other things, and they are spending a lot of money in building, collecting information, implementing systems for these requirements. So, for example, I just mentioned a few minutes back, is there a connect between fraud and AML? So let me pose a simple question. If the AML system red flags a transaction,
Yeah.
can it also be an indicator of fraud? Okay.
Yes.
For example, when we talk about trade finance transactions, one of the red flags could be that some of the transactions which are thrown from an AML system indicates that these transactions are not in line with the customer's business,
Yeah.
or where the turnover in that account is not as per the customer profile.
Mm.
Can you treat that simply as an AML issue, or is there a link which indicates there could be a potential fraud that might happening, like a diversion of fund or siphoning of fund that might happen, which are probably some of the fraud or early warning signals kind of scenarios? There is obviously a connect, so there is a link between the two. The second, like for example, could bribery and corruption issues lead to frauds? For
Yes.
example, if one of the employees is caught taking a bribe, how many organizations look at reviewing all the decisions taken by him? Is there a link between a politically exposed person, as we call PEP screening, to identify potential tax crimes and AML issues?
Yeah.
So as a result, what is happening is data is duplicated across the organizations and they're failing to connect the dots. It is happening in silos. So the traditional silo-based approach to managing financial crime risk and compliance, where you have separate organization structures to support individual risk types, like say a money laundering, card fraud, or internal fraud, will no longer suffice. Uh, and it will also disconnected a set of fraud or AML platform is less likely to stand up to attacks that cut across multiple business lines, geographies, and risk types. So everybody needs to start looking at it more holistically, looking at connecting the dots and see
Mhm.
how you can look at managing those issues as one issue rather than looking at it in different forms. So these are some of the challenges that I was looking at. So the question that you posed was, if I understand, you said that what are the expectations from the regulators, right?
Yeah, key challenges.
Yeah. So these are some of the key challenges. The key challenges, one is disaggregated forms, how we are looking at it in terms of issues. Uh, the other, besides what I have said, there are, if I can classify into four major areas, one is regulatory expectations. Uh, Regulators, while they continue to expect strong FCC standards, robust control, enhanced due diligence, and policy and procedures, they also continue to get evolved new set of regulations come in, and especially for organizations who have multi-jurisdictional presence, they need to comply with each of the regulations across the jurisdictions. So that becomes one of the biggest issue. The second is that the operational part of it, which is that the operational structures, as I described, are working in silos, are not in sync with the fast moving financial crime landscape as we can see.
Yeah.
The third is obviously people.
Yeah.
The biggest issue is that the battle to solve financial crime is rapidly evolving into a race for a talent, and that is becoming scarce. People who understand this, what should I say, as this modus operandi that happens in this world, how do you look at connecting the dots, those kind of experienced people are becoming difficult to get. And obviously is the final one is technology. It's a double-edged sword. While organizations look at implementing technology to increase the ease of doing business or for customers to access the financial system, but it
Yeah.
also poses some significant threat. And the biggest threat is, can you meet some of the regulatory expectations for a near real-time analysis to potentially detect and prevent those activities, will depend on how the bank is able to leverage the technology investments that they are making.
Um, Karthik, can you just make your volume a little louder? Because
Can you
or
hear
at
me?
yeah, don't move too much, otherwise
Yeah,
some of the words get lost.
is this fine now?
Yeah, yeah, this is fine, absolutely fine. Yeah.
Yeah.
So you talked about the issues, regulatory expectations, and the people. So let's look at the internal organizations of the. Let's say look at banks. Okay, that's being the biggest financial things. How do banks organize themselves to prevent financial crimes?
Yeah, that's an interesting question that you look at. Uh, uh, let's look at how our banks at the moment, and this is a general view. It may not necessarily to be every
Yeah,
bank, but generally what you see. The first question that I ask is, who is responsible for fraud risk management at a bank? It will
yeah,
be, you'll have probably a fraud risk department. You'll have somebody in vigilance department who will do investigations. You might have somebody in the risk management department, which who will look at credit risk, operational risk, specifically related areas, right? Then you will have somebody who looks separately at AML, anti-money laundering compliance, who will be a money laundering risk officer. He might be the chief compliance officer. So you have another person looking at it. Then let's look at the issue related to market abuse and other certifications that happen. So you might have somebody from the operational risk or somebody who is looking at from the legal standpoint of view that he needs to certify. Okay.
Yeah.
And when it comes to cybercrime, it will be somebody from the operations who's looking at it to monitor stuff like that. So if you look at it, it is spread across the bank. And
Mhm.
not wrong in saying that you cannot have it, because there are certain specialized skill set that you require. But then how do you look at aggregating it? The different information to come at a point of view is where this problem is coming. Could there be that you can have some of the departments which can be merged together to look at it holistically, or how the information flows from one siloed part of that organization to the siloed part of that organization, to ensure that while I have identified something, do you want to look at this particular account? For example, when I mentioned that in an AML, I found
Mhm.
not in line with the customer business, does it
Mhm.
go back to somebody in fraud and saying this is the transaction that's
Yeah.
happening? Look at it,
Yeah.
and that's an issue. So those kind of coordination is something that's a mechanism that is still evolving, and probably will take some time for having a uniform approach to it.
So do we? Are there any heads of, or they report into the risk officer?
Yes. So what happens is that's what I said. You have a risk management department who will have a risk officer. You will have a chief. We will have a money laundering risk officer who will report into the technology or operations person who will report separately into the operational head. So at the end of the day, probably you need to have a unified command to say an FCC compliance person who will look at across the spectrum.
Okay. And these are like standards across the globe, or?
Yes, some of the banks have come up with the new rules called as financial crime compliance. So
Yeah.
while what happens is that at the moment will not involve everything. Probably cyber is still considered separately because it's a more
Yeah.
regulated. But whether it's a fraud or an AML, they will try to look at it at a as one umbrella.
Yeah, sure. Cyber is still is already looked at separately by the CISO. So you have a CISO in every organization,
Yeah.
and that's why the question I asked you: how are banks,
Correct.
modeled into this?
Correct.
So thanks for that. Also, is this a board item that every quarter the board meetings, do they have to bring this in the board so the board is aware of what's happening?
Yes, of late, what we have seen is that this has become a CCO2 issue. It's not just because of the financial losses, the number of entities that have gone up, the number of fraud cases that have gone up. If you look at the RBI annual report that came in, that showed a significant increase in the number of fraud incidents that have happened almost 2.5 sorry, just 2.5 years, and that was primarily in the area of advice. Okay. So when you look at it, it's not only a big issue because of the financial numbers, but also because of the reputation risk. The second is obviously because you also have an FATF review and all coming in. The AML compliance is also taking a lot of focus. So if you look at it, it's become a top issue for most of the bankers, and it is expected by the regulators that these issues are discussed at the board level, and the major focus for most of the regulators is to look at the whether it is discussed or not, it is the quality of the information that is discussed at the board level that is what is coming into focus. It does not mean that okay, I give a MIS report saying that okay, so many frauds have happened, this is how much I've detected and all that. The first question
Okay.
I ask the board is that do you know what are the risks that is there? Right? What are your vulnerabilities? Do you have an idea of what controls you have put in place? How are you managing the risk? What is the risk appetite for a bank to manage these kind of risks? And all these subsequent questions in terms of okay, you have identified this, what are the mitigation measures that you have put in place? Where have you provided enough should I say financial support and probably technology support to help implement new systems or controls in place. So these are the type of things that the regulators have started asking questions at the board level when they come for it.
Okay, that's good to know. So, ladies and gentlemen, I hope you're getting into the thick of financial crimes in that are perpetuated in many other financial institutions, India and abroad. Um, while I continue my discussions with Karthik, if you have any questions, and I already see one observation, at least not a question, that has come from an audience. You ask your questions in the Q&A box, and I will get it across to Karthik for his comments. And should you want to ask a question directly to him, you could do that. You could raise your hand, and the digital team will facilitate to get you across and talk to, so that you can pose a question to Karthik, and so he get his comments directly. So let's look at one of the observations that I have. It's not a question; it's more of an observation, Karthik. You may want to comment on it. He says we have a comment from Mr. Prabhakar Kaza. He says banks are at the forefront of financial crime control. The biggest weapon banks have are senior management compliance. As long as greed governs the banks, there is little chance of controlling financial crime. Your thoughts?
Okay. Okay, let me answer it by we did the banking fraud survey earlier. So when we asked the questions, and it's very interesting. We have been doing it for the last 10 years.
Yeah.
The first and one common theme
Yeah.
that came across all the three surveys is that the business pressure to meet targets.
Yes.
Okay. So
Yeah.
the question is that I'm still waiting to get an answer, direct answer from everybody whom I would like to ask is that contributing to the increase in fraud? Is that the tone from the top? That is
Yeah.
where the question comes is if there is a business pressure to increase fraud, and one of the reasons that we have seen when we look at our fraud, most of the investigations that we have done, or the surveys that we have done, and discussions we have had with the bankers and others, is that the tendency to actually, should I say, to have an oversight on what should I say as um, what do we call that as limited oversight by the manager or a senior management on process deviations and managing your day-to-day responsibilities.
Right.
So this came about, and this has been pretty common across the all the three editions in the decade that we have come across. So if I put two and together, probably you get probably a germ of an idea is that the business pressure to meet targets contribute to the problem,
Okay.
and that is
Yeah.
where the tone from the top becomes important. It cannot be business at the cost of compliance.
Yes. Yeah. But business targets are there for all sorts of. I mean, and that's a important thing to have in a business. Without targets, nothing works. But that's no excuse for doing a fraud, I guess.
Absolutely. A very, if I can say, quite a few times when we have done some reviews, and I'm sure there are many bankers, you can do a simple analysis. If you
Yeah.
look at how many sanctions and approvals are done during the month and at the end of the quarter or half year, you'll probably get an answer for it.
Yeah. Yeah. Correct. That's true. So, Karthik, let's look at FATF. We heard a lot about FATF. I'm sure audience also have heard about FATF coming in the newspapers and television channels, etc. So, what is FATF? What India is expecting and India is expecting a FATF review also, right? So, what is the review? What is India expecting, and what do you think should be the focus areas?
Sure. So FATF is the full form of it is Financial Action Task Force. So we have been a member of FATF since 2010. So this is a group or a body which promulgates standards and guidelines on anti-money laundering compliance, and it will have reviews of various countries across the globe, and it determines found deficient in implementing this AML controls, and then probably they will flag them off, like they can put them on a gray list or blacklist kind of situation. And if you are in any of those gray or blacklist, then the financial system comes under increased scrutiny, because it indicates that your financial systems are not robust enough in managing the money laundering risk. And so all your transactions, your global transactions, there will be a lot of difficulties in undertaking global transactions, because your correspondent banks will have issues in terms of whom they deal with and how your transactions are happening. Your what do you call as financing, or probably taking a loan from a World Bank or IMF becomes also difficult because of your rating. So what that is why it is very critical that you have a robust system in place, not just in terms of your regulatory or the legal framework, but also the implementation of those framework. So what happened was, luckily I was part of a team which worked during the 2010 review. So what happens is, at that time you had a review that came in, and this time the review will be slightly different compared to what it was earlier. It is going to be much
Mhm.
rigorous. Earlier, it used to be they would interact with the government, the regulators, and others, and collect the information, analyze, and discuss with them. But this
Mhm.
time, you might even pick up a few financial institutions and go and talk to them to
Go
find,
and audit.
not an audit. They'll just go and talk to them to
Okay.
find the level of awareness, and the and 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 probably get a sight into how seriously these issues are being considered. So, so so what we need to do is that when we look at an FATF or the guidelines that have been present,
Mhm.
and what the financial institutions or the financial industry are aware of, is that one, you need to have all your proper policies, procedure, systems in place, and regulators, as I mentioned, across the globe have increasingly started focusing on the role of senior management in this process.
Mhm.
So you need to have be aware of all the risks that we are talking about, and how these are discussed, and how seriously the actions are taken. The second, and as you see, there have been a number of regulatory guidelines from RBI and others which have just come out. Like, for example, in April they came out with a guideline to do an internal risk assessment. So the reason behind this is because our AML regime is following a risk-based approach. Okay.
Mhm.
What do you mean by a risk-based approach is that you decide what are the risks that your institution faces, and you develop and implement appropriate levels of controls to monitor and manage those risks. And so the first question that comes up is, do you know what are the risks that you're facing? So the first step is to do an institutional risk assessment to understand what are the risks that you're facing. So that is one of the guidelines that came in. Then secondly, there was another regulation that came in terms of identifying who your ultimate beneficial owners are in an
Yeah.
organization. So your customer due diligence has come into a lot of, as your customer due diligence, in terms of not only at the time of onboarding a client, but also on a periodic basis, in
Yeah.
terms of how you're collecting information, the screening that you do, sanction screening, PEP screening, negative news screening, and how you're arriving at the risk profile of the customer, and
Yeah.
how are you risk the customer. The third is obviously your systems that you have put into place, that the transaction monitoring system, how effective they are in detecting those red flags. And finally, the biggest area that is coming up now is trade-based money laundering, and that is not just in India but across the globe. And there are
Mhm.
new certain regulators like MAS and others have come up with certain guidelines. So that is a new emerging threat. It's not an easy, should I say, way to detect trade finance, trade-based money laundering schemes. Like for example, some of them could be over invoicing, under invoicing of goods and others. There is no easy way to detect if a
Yeah.
particular system is
So we,
over invoice. So
we'll
so
talk about the trade financing and money laundering.
correct, correct.
Let's look at FATF. You said it is different this time because they are also not only going to talk to the government, they may go to some financial institutions and talk to them also. So
Yeah.
that's the difference. That's the only difference we have.
That is one. There has been a bit of the change in terms of the guidelines that they have given.
Yes.
So what they are looking at is not just the legal framework, but the effectiveness of those implementations, how it is happening on the ground, is what
Okay. Okay. So currently, who are the? Are there any institutions or bodies under the FATF who have been blacklisted?
No, they're not institutions or entities. So you know that Pakistan, for example, is in the grey list. You have Mauritius, which has come under the grey list. And there are a few other countries which are in the grey list of that countries. North Korea is obviously in the blacklist of FATF and others.
Okay.
Those are the countries which have been evaluated. If you go to FATF site, there are about, if I recall, 18 or 20 names which are either in the grey or the blacklist.
Okay. All right. So let's look at one of the big financial crimes, that is the anti-money laundering, right, or the money laundering. So is there a connect between the anti-money laundering and fraud?
Yes, KK. So that's what I explained at the start itself. So, for example, if I look at certain transactions, uh, does that indicate only an AML issue or a fraud issue? For
Yeah.
example, somebody is doing transaction which is not in line of his business, it is a fraud issue, or is it an AML issue? Number one. Is if it is not in profile. So what do I look at as a profile of a customer? I look at, for example, if it's an entity, I look at the turnover of that company. Okay. And then I say if it's 100 crore turnover, suddenly it does only business less than 100 crores, say maybe 20 crores or 30 crores in a year.
Yeah.
Then when I look at the account, the transactions just 20, 30 crores, does that mean that uh, the profile that I created was wrong? Or is that there are some other account which is holding somewhere else, not in this bank, which could be an indicator of diversion or siphoning of funds? That is the second. Similarly, if I say 100 crores and I do 1,000 crores worth of transactions, okay,
Okay.
then that's a bigger issue for me, because then how is it suddenly increased? Am I being used as a shell company to just route the transactions,
Yeah.
create transactions? That's what needs to be evaluated. So when you look at it, you do a due diligence. The due diligence, not just creating a profile, like you do a credit due diligence, you also need to do an AML due diligence. And these two will combine together to help you identify fraud or an AML. And just a technical point, if you look at it under PMLA, fraud or cheating, as you call it, under IPC, is one of the predicate offenses. So if you look at it, is there a connect from legal point of view? Yes, there's a connect. But from a more fundamental point of view, if you look at logically, when I was talking about those transactions that are connect, there is definitely a connect.
Yeah. Um, is AML is now a mandated thing in the banks, correct?
Yes.
By the RBI, and even the fraud risk management is also mandated.
Yes.
Correct.
Yes.
Is that across the board for only banks, or is it for NBFCs and others also?
For everybody. It's for everybody.
It's for everybody. Okay.
And why only AML is not just across for regulated entities under RBI. Even you have the insurance companies, IRD have to follow that. Capital market entities have to follow these guidelines. I mean, that will come from SEBI, and IRDA will give the guidelines for insurance companies. And
Yeah.
don't forget, if you see the amendments to the PMLA, even your gems and jewelry dealers and real estate agents will come under the ambit. The guidelines, but then those will also get covered under the.
Okay, Karthik, what is FCC and what are the regulatory expectations for FCC?
What the regulators, when we talk about what the regulators are expecting,
Yeah.
One is uh, when a regulator comes for an inspection, what is his
Yes.
focus area? Let's put it that way. And then probably we'll talk come down to the expectations. One is, do you have an effective governance mechanism?
Yeah.
How is your due diligence happening, whether it's a credit due diligence or your AML due diligence?
Mm.
Do you have mechanisms in place to identify shell entities and other entities, or a shell bank or an unlicensed bank for banking transactions? So do you identify the source of fund and source of funds, and with a lot of focus specifically, not just for every high net worth individual, but with a lot of focus on politically exposed persons? Are you identifying those politically exposed persons?
Mm.
How do you onboard a client? So if you have onboarded a client face to face or non face to face, so what are the mechanisms that you use to do your due diligence for non face to face customers, which are usually high risk customers for you?
Right. Yeah.
Then how do you look at monitoring the dormant accounts that you have in your system? Then how do you look at your transaction monitoring system? Is it generating all the, do you have all the scenarios that you need to monitor? Because at the end of the day, your risk can be classified into an inherent risk and a residual risk. The residual risk is what you need to monitor, right? So
Right.
does the system help you? If you cannot prevent it, how is your transaction monitoring system helping you detect these issues more proactively before it blows up sometime in the future? So it could be an EWS system or an AML transaction monitoring system. They're
Yeah.
asking questions like what I have asked. Is there a connect between the AML and fraud? Okay. Are you noticing any sudden large activity which are inconsistent with the practice of the customer and the financial ability?
Mhm.
Who are the counterparties that you are dealing with, third parties, in terms of how you deal with it, and how do you manage the relationship? So for example, in an AML, if you find an activity which you find it to be suspicious, you report a suspicious activity report. So how do you monitor that account more closely after having find an SCR? So these are some of the focus areas that
Yeah.
the regulators are looking at. So what is the expectation? Is that they expect that financial crime, whether it's an AML, sanctions, fraud, are discussed actively at the board level, and
Yeah.
and the board is aware of the issues. That's what
Yes.
they are also focusing on the importance of maintaining a culture of compliance and risk management. Basically,
Okay.
what I'm trying to say is that to be truly effective, the framework must be reinforced by the proper tone from the top. They're looking at
Mm.
tone. The focus
Yeah.
now a lot is on trade finance and trade-based money laundering, sanctions, and tax evasion related areas.
Okay.
how how effective is your due diligence? Because in fact, when we did an AML survey, due diligence also needs to be upgraded, came out. When we asked in a fraud survey, the rise in significant NPA levels, which was almost 2 years back, almost half the people said that one of the reasons for that was the due diligence that they did, great due diligence that they did. So if you look at it, and as I mentioned, there's a commonality between the due diligence that you do with both AML and credit. What is the standardization that you use? What are the standard due diligence procedures you do? What is the enhanced due diligence that you do for
Yeah.
and this becomes more prominent, especially when you are looking at a lot of small and medium enterprises where a lot of information may not be publicly available.
Mm.
Okay. And then you have transaction monitoring, surveillance, screening, list management, and all that. How effectively are you doing that? And finally, if you see, even the regulator few months back came about, especially on the fraud risk management framework. I'm moving away from AML to fraud also, because they looked at asking banks to implement the Malegam committee recommendations as well. So that's again a comprehensive one. It talks about creating a separate intelligence unit within the risk management department to monitor high value accounts.
Okay.
Go and get the market intelligence on the customer. Then looking at transactions in the account of the customer. Create using certain data analytics and artificial intelligence, especially for your retail portfolio and online transactions to prevent and detect
Yeah.
those issues. So they are talking about on the fraud, and these are something which have always been there on the AML side. So that's where we see the convergence also coming in. There is the expectations from the regulators.
Okay.
Mm.
So let's take one question. Cryptocurrency. Okay.
Mm.
So the question is, do they have far-reaching implications in financial crimes?
Oh yes, oh yes, a lot, and that's
Okay.
why if you see the regulations in India did not allow cryptocurrency to be paid in exchanges in India. So cryptocurrency at the moment is not allowed in India. So what
Correct.
is issued outside? The biggest problem of cryptocurrency is the anonymity anonymity that it will
Yeah.
provide the transactions that may happen, and that is where the biggest difficulty is. And if you look at it, a lot of these cyber crimes, you keep hearing the news. I don't know how far it is true. They keep saying that a lot of these hackers ask for payments to be made in cryptocurrency to them, right?
Yeah.
So if you look at it, it is becoming a bit difficult because you don't know how to monitor the transactions for this, who is the beneficiary of those transactions and all. So that is why the biggest issue with cryptocurrency is AML compliance. It can be easily used for money laundering, terrorist financing, evading sanctions, tax crimes. It can be paid and without it being easily detected.
Okay. But do you think that if we have the country's own legal cryptocurrency, this sort of this financial crimes will come down?
See, frankly, KK, I don't understand the concept of a legal cryptocurrency because you have a legal tender which is rupees in India, right?
Correct. So you have a legal
It,
tender
it,
also
it,
called as some kind of a coin.
yeah. So if you are talking about what should I say, as a virtual currency that is being created, if it is
Yes.
created by the central bank, that's a different matter. But then
Yes.
central bank will say anyway you have online transactions which you can do from your bank account, right? Then why do you need a virtual currency to do that? So that's a
Mhm.
that will come up. If you're putting the technically the virtual currencies are being created by private players, right, at the moment,
Yeah.
and those are being traded. The second biggest issue is not just in terms of money laundering issues that we spoke about, but
Mhm.
also issues in terms of how do you value that cryptocurrency, because you're seeing huge fluctuations in the cryptocurrency valuations that have happened, right?
Yeah.
So
Yeah.
prone to manipulations as well. So the question is not only who creates that currency, but also how you manage that currency.
Very true. Very
I
true.
think that is where the difficulty is.
Yeah. So let's talk about the trade business and money laundering, and that something seems to be. I've also read a few places. It's something like becoming a big menace by itself. How does PBML work, and how does money laundering happen with trade business?
Okay. So let's see. Monitoring and detecting TVML is one of the biggest challenges for financial institutions, because
Okay.
what you find is that the trade financing is very document centric.
Yeah.
There a significant reliance on manual monitoring and screening. Okay.
Hmm. Hmm.
Additionally, the customers are usually corporate customers who may sometimes be reluctant to share a lot of relevant information that may be required by FIIs to financial institutions to do their due diligence.
Okay.
Further, what also happens is like complexities also arise because a lot of the information is in an unstructured format.
Right.
For example, within Swift messages and all, you find it as a free text. How do I screen those free text? Okay. So that is one area that you look at it. Then the second biggest area is let's talk about the other major area is what do you call as over invoicing and under invoicing of goods,
Yeah.
right? So when I talk about over invoicing or under invoicing of goods, the biggest
Mhm.
issue is how do I look at the issue related to what price is correct? When do I say that it's a overpriced or underpriced?
Yes.
Okay. The problem is that ascertaining that right price becomes a problem because the banks will need to don't have a basis for saying this is the right value of the good. For example, when I'm looking at commodities, if it is being exported, let's say to gem and
Mhm.
jewelry or a diamond, the valuation of the diamond can get varied. The banks will say, okay, I rely on what is the price that is being quoted on the invoice and certified at the customs, right? But the
Mhm.
problem is customs will also say that if you go and talk to them, they are not certifying the value of the diamond. Okay, that is a certification that's first certified by the person himself. They will do a very small sample valuation of it, and they are not experts in say gems and jewelry or something of that standard, right? So ascertaining the right price becomes a problem.
Yeah.
And the second is what are the goods being transacted? Okay, so in TBML, like what we talk about sanctions, there is something called as a dual use goods. There are goods which can be used for normal commercial purposes, but it can be also used for certain military purposes.
Right.
So certain countries, like for example, Russia or other places, there could be goods that cannot be transacted. So you need to know which are the goods which can be considered as dual use goods, do a dual use goods screening to identify if these goods are being transacted to the entities where which they are not supposed to be transacting with.
Yeah.
The third is, do I have an export or import license to do that?
Mm.
Of the times I don't know. The banks do not know. Am I supposed to do this kind of transaction or not? The fourth is circumvention. What also happens is you have sanctions that needs to be complied with. For
Yeah.
example, exports goods to North Korea, for example.
Yeah.
How do I know that a goods which is landing up in a China or a South Korea does not get finally moved into North Korea?
Yes. Yeah.
So that becomes another issue when you are talking about it. So for them, it's not clearly saying that only simple. I look at the transactions to uh, undertake this monitoring because the data is not available. It's very difficult for you to find out who the end customer is beyond a point. You don't know the goods that are being transported, if there is any
Mhm.
circumvention that is happening, and the data is not available. For example, if I exported a good, how do I know that it has landed at the other port or not? There is
Yeah.
no data. If I'm importing certain goods, there is no custom interchange information between different countries. That is also not available. And this gets all the more complex if you're talking about open trade because it does not even hit your shores.
Yeah.
That is where the biggest issue of money laundering comes into play.
Okay.
That is
So I
why
have a very
regulators
interesting
are
question for
also
you, Karthik.
sorry, please.
So, you were saying something?
Yeah, so that is why the regulators are also focusing a lot because it
Yeah.
is not easy to find out, but it's a pretty significant worry for the regulators across the globe.
Okay. So, a question that has come is, this is Karthik. Despite all the steps banks are taking, people like Nirav Modi, Chokshi, and Mallya have fled the country. Does the international community help each other in fighting this menace? Can't hear you.
Oh, I'm sorry. Can you hear me?
Yeah.
Yeah. See, there are two aspects to this story. When you look at it, the, the FIU, the Financial Intelligence Unit, which is established in each of the countries that we are talking about, which are member countries, they interact a lot. Uh,
Speak a little loudly.
Yeah, the FIUs which are established in all the FATF member countries, they have a lot of interactions that happen,
Okay.
sharing that happens in terms of the skills that's happening, a piece of getting information in terms of the business. Okay, there's a lot of information that gets shared. That's number one. That's happening. What the question has been raised is more on the legal aspects of it. In terms of
Okay.
he has left the country, if we have to bring him back to the country, that's a legal process. But
Yeah.
if you look at it, most of the countries at the end of the day, if you are, and if you look at all the cases that are being fought in this
Mhm.
court, it is at the end of the day boiling down to two things: fraud and money laundering. Okay.
Yeah.
And if you look at and if you look at the globally,
Yes.
you will find that there is a lot of support for ensuring compliance to that. So the regulation, the legal system also will, to the extent, help you in probably looking at this as a crime, because it's a crime in most of the all the countries that we're talking about. So
Okay.
it's not just saying that it's a crime in India, but it's not a crime in a UK or a US. It's a crime everywhere. Okay. So for you to prove that, it's only for the first step is to prove that you are able to prove that it's
Yeah.
a or a money laundering offense. Once you prove that, then the legal proceeding starts, and whatever that other issues that come in as a legal proceeding will.
Okay. So
But
yeah, so I think we have heard about, and AML and other things which are very popular. Something that some of those anti financial crime module, which is the PEP, right? The politically exposed persons. Okay,
yeah,
how does this work, and how do local banks know about an international PEP?
sure, sure. So see, the reason behind PEPs, if you look at it, PEP has been classified what we call as politically exposed person. The first understanding it does not mean that it's only politicians. Okay, it,
Sorry.
it it does not mean that it is only politicians. It
Yeah.
includes people who are associated with a politician, their close family members, some of the bureaucrats, senior bureaucrats who are part of the government. And the reason behind this is that they have access to a lot of powers. There is a possibility that some of the processes of crime, especially bribery and compliance, could be pretty
Mhm.
prevalent in some of those jurisdictions.
Yeah.
And beneficiaries of it. That's why a PEP concept came about. How can you identify a PEP? There are numerous databases that are available across the globe, whether it's on
Mhm.
Deloitte, Regulators, and others. There are a number of them. You can just need to search the name, and it will tell you whether it's a PEP.
Okay. Great. And so that is PEP. And recently we've heard a lot about adverse media screening
Hmm.
used in organization. How does it work, and for what purpose it is used?
Yeah. So what it does is adverse media, for example, what are the due diligence that I do? I look
Yeah.
at ID document, the address verification, and blah blah blah. I get their source of funds, source of wealth, and other things. I look at it. I look at it in the sanctions list. Is he a PEP customer or not? These are some of the due diligence. But when I create a profile of the customer, I need to know more about the customer. Okay, he may not be a sanctioned individual, for example, but then he will be somebody. Let's say, for example, who has fled my country,
Yeah.
has fled my country, but he is not a sanctioned entity or a sanctioned person.
Mm.
Okay, so where do I find that name? That will come up in negative media search. Okay, second, what happens if I'm about to onboard a customer, and there are a lot of news that there have been uh, cases against that company for
Yeah.
evading. taxes, for what do you call as siphoning of funds and other things. These types of information that come in. This you will not find in your normal due diligence, right? So when
Yeah.
you look at risk rating a customer, you're identifying the risk that the customer poses to you. This is where your negative news information comes into play. So you are able to identify not just about the entity, but also the ultimate beneficial owners of that entity, because ultimately they are the ones who control that entity, right? So is there any negative news about them, so that you can form an informed view of the risk of the customer and the
Okay.
profile of the customer before you onboard him?
Okay. So that's like increasingly being used.
Yes, 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 absolutely, absolutely.
Super. So we have come to the end of the hour, but I have a couple of questions. If you're okay, I'll take them. Just a
Sure.
few more minutes, if you don't mind, please. Now, this is like from a career point of view. Let's look at that. Is there a formal education in how to tackle financial crimes, and how does one go into that? Some other people may be interested in this line.
Yeah. See, there is no formal education. There are obviously courses like fraud, you have CFE, for AML, you have ACAMS and all. These provide the basic foundational courses to help you understand that concept. But at the end of the day, it will boil down to how you understand the subject, your experience in dealing with it. To help you. There is no formal course on financial crime or AML or fraud and others. This is
Okay.
something, these courses provide your foundation, but then it's your experience that helps you build it.
Okay. Another question that has come is official sources that say that it's about India. 9,000 crores has been seized by the ED in a decade as suspected proceeds of money laundering. However, convictions rates are very poor. Hardly anybody is so far convicted, or just about one or two. Why is the conviction? Is that the there is no proper investigation happening, or how does it happen?
See, the question is, the conviction will only happen once the case is heard, comes to its logical conclusion. That
Yeah.
it takes a long time. So
Yeah.
probably that is something which has been raised earlier. In fact, the FATF also raises that question. In fact, why is there so low conviction rate? But then what you also need to look at is, when you are convicting somebody, okay, and that's a very important thing that you need to understand. Earlier,
Yeah.
you had to get convicted under the Money Laundering Act, PMLA. You had to get convicted as one of the predicate offenses. So if you're convicted of fraud, you will get convicted for PMLA also.
Yeah.
So if you're not able to prove a fraud, where does the predicate, if there's no predicate offense, where does it come in? But that has ended now, and now these two can run parallelly. They not necessarily be linked. Okay.
Okay.
You
Yeah.
probably see more decisions that's coming in. But then at the end of the day, it is all also on the mercy of the legal system, how fast that case can be fast tracked and reach a logical conclusion. But there are some significant judgments that have come about, if you see, in terms of people being convicted under PMLA
Okay.
offense.
Sure. Okay. Great. So my final question to you is, Karthik. This financial crime is definitely a big menace. So in the new year, what would you advise financial institutions to adopt and implement, such that they are at least they mitigate that risk?
Yeah. So the first thing in financial crime I would suggest is to first understand what your risks are. So, like as they say in Lewis Carroll, this thing, if you don't know where you are going, it does not matter where you go, right?
Yeah.
So it's like you need to know what are the risks that you face. So first, you need to undertake a risk assessment. You need to understand what are the risks that your organization faces. What are the controls that you have put into place? Are they effective and efficient in managing those risks or not? Once you have done that, is when you need to take where I want to make the decisions. Yes, how do I improve those compliance mechanisms? The second thing that I would say is that start looking at it a little more holistically. It may not happen overnight, but then
Yeah.
when looking at making decisions or implementations or investments in certain compliance, please take a bigger picture to see if it can encompass multiple areas within FCC, so that you can probably more effectively and efficiently with the less investment cover more,
Yes.
and probably connect the dots, as we say.
Yeah. True. True.
These are the two things that I would suggest.
Thank you. Thank you. Thank you, Karthik. It was wonderful talking to you. So, ladies and gentlemen, financial crime, as explained by Karthik, has become a global concern affecting a lot of organizations, large organizations, small organizations, governments, financial institutions, businesses, and even individuals. The impact of financial crime can affect you as an individual, damage reputation, result in a loss of consumer or investor confidence, affecting the brand image of a company. And that's very important for all of us to realize that it has a big reputation impact. And it may even reduce a country's ability to attract foreign investment. If there are too many such things happening, money laundering and other things happening, yeah, foreign investments will definitely come to a halt. Therefore, fighting financial crimes continuously must be a focused area of operation, especially in the financial institutions of India. With these thoughts, I would like to thank Karthik. So please join me, ladies and gentlemen, to thank Karthik for coming over and spending an hour with us and telling us all about financial crimes. Karthik, thank you very much for coming and telling us a lot of very good information on financial crimes. Thank you for coming and spending your time with us.
Thank you. Thank you. And have a
Thank
good
you. Thank you very much. So, ladies and gentlemen, look forward to meeting you all on Friday. Till then, goodbye.